Have you ever wondered how a virtual currency, Bitcoin, has influenced the financial market? Let's take a journey back to 2009, a year that marked a radical shift in the financial world with the introduction of Bitcoin. It was a time when the world was still reeling from the aftermath of the financial crisis, and trust in traditional banking systems was at an all-time low. Enter Bitcoin, a new form of currency, but not just any currency, a digital one, decentralized and free from government control. This was a paradigm shift, a break from traditional financial structures. Bitcoin was the first of its kind, a pioneer, a revolutionary idea that challenged our understanding of what money could be. It was the birth of a new asset class, cryptocurrencies, a term that would become a buzzword in the years to follow. Bitcoin's decentralized nature was its standout feature. It was not controlled by any government or central authority. Instead, it was governed by a process known as blockchain technology, a complex system that ensured transactions were transparent, secure, and most importantly, anonymous. In the years that followed, Bitcoin's influence grew exponentially. It was no longer just a fringe concept discussed in tech forums, it was being adopted by businesses, traded on exchanges, and even making its way into people's investment portfolios. Bitcoin became a symbol of financial freedom, a tool for those who believed in a future free from the constraints of traditional banking systems. It was a beacon for those who wanted more control over their money, who sought transparency and security in their transactions. But Bitcoin was just the beginning. Its success spurred the creation of thousands of other cryptocurrencies, each with its own unique features and uses. The cryptocurrency market was born, and with it, a whole new way of doing business, investing, and even thinking about money. This was the Bitcoin revolution, a revolution that reshaped the financial landscape, challenged traditional norms, and introduced us to a future where digital currencies could coexist with traditional ones. Now let's delve into the origins of this monetary revolution. Bitcoin didn't just appear out of thin air, it has a fascinating backstory. Its inception traces back to an individual or a group of individuals operating under the pseudonym Satoshi Nakamoto. The world was introduced to Bitcoin when Satoshi published a 9-page white paper titled Bitcoin, a peer-to-peer electronic cash system in October 2008. This groundbreaking paper laid out the foundational principles of Bitcoin, proposing a system of digital currency that could operate independently of central banks. It aimed to solve the double spending problem, an inherent issue in digital currencies where one could duplicate the digital file and spend it twice or more. Satoshi's solution was a public ledger of all transactions, a concept we now know as the blockchain. Fast forward a few months to January 2009, the world witnessed the mining of the first block of the Bitcoin blockchain, fondly known as the Genesis block, or Block 0. Embedded in the code of this first block was a headline from the Times newspaper, "Chancellor on brink of second bailout for banks." This message was seen as a poignant critique of the failing financial system and a clear indication of why Bitcoin was created. Satoshi Nakamoto continued to work on the Bitcoin project until 2010, when he handed over the reins to Gavin Andresen, a software developer who would become the lead developer of the Bitcoin Foundation. Satoshi's last known communication was in the spring of 2011. Since then, the identity of this revolutionary figure remains shrouded in mystery. But the story of Bitcoin doesn't end with its creator's disappearance. The cryptocurrency continued to evolve, driven by a community of dedicated developers and early adopters who believed in the potential of a decentralized financial system. So, we've seen where Bitcoin comes from, but how does it work? Understanding Bitcoin requires a basic knowledge of its underlying technology, the blockchain. A blockchain, in its most simple format, is a chain of blocks. Each block records a series of transactions, and once a block is filled with these transactions, it's added to the chain in chronological order. But how does this happen? Let's dive in. When you make a Bitcoin transaction, it gets broadcasted to a network of computers, known as nodes. These nodes have the job of verifying your transaction. They check the details, making sure everything adds up. If it does, your transaction is added to a block. This block is then attached to the previous block, forming this immutable chain we call the blockchain. Now you might be wondering what's in it for these nodes. Why would they go through all this trouble? Well, this is where the concept of mining comes in. Some nodes in the network, known as miners, do the heavy lifting. They verify transactions, add them to blocks, and solve complex mathematical problems to add these blocks to the blockchain. It's a bit like a lottery, where the first miner to solve the problem gets rewarded with new bitcoins. This is how new bitcoins are created and enter into circulation. But mining isn't just about creating new bitcoins. It plays a crucial role in maintaining the network. It ensures transactions get verified, the blockchain keeps growing, and the Bitcoin ecosystem remains secure and decentralized. So the mechanics of Bitcoin involve a complex interplay of technology, mathematics, and economics. It's a system that's designed to be transparent, secure, and democratic, offering a radical departure from traditional financial systems. It's fascinating, isn't it? This digital currency, which started as an experiment more than a decade ago, has now become a global phenomenon, challenging the way we think about money and finance. Now that we've got a handle on how Bitcoin functions, we can look at its impact on the financial markets. Bitcoin's influence on the financial market is undeniable, but what exactly is its impact? In the past decade, Bitcoin has undeniably shifted the paradigm of traditional finance. It has challenged the status quo, prompting us to question the very definition of money. This digital currency, decentralized and free from government control, has introduced a new way of transferring value across the globe. One of the most significant impacts of Bitcoin has been its role as a hedge against inflation. Traditional currencies are subject to inflation, which erodes their purchasing power over time. This is particularly evident in economies where hyperinflation runs rampant. Bitcoin, with its capped supply of 21 million coins, is immune to this. As a result, many see it as digital gold, a safe haven asset that preserves wealth in turbulent times. Institutional investment in Bitcoin has also been a game changer. Initially, the traditional financial sector was skeptical of Bitcoin, viewing it as a risky and volatile asset. However, as understanding of the technology grew, so did its acceptance. Today, many institutional investors, including pension funds, endowments, and even corporations, are investing in Bitcoin. They recognize its potential as a store of value and a means of portfolio diversification. Now, let's talk about the influence of Bitcoin on the creation and growth of the cryptocurrency market. Bitcoin's success has paved the way for thousands of other cryptocurrencies, collectively known as altcoins. These digital assets, each with their unique attributes and use cases, form a diverse and dynamic market. The cryptocurrency market, once a fringe sector, is now a significant player in the global financial ecosystem. The implications of Bitcoin's influence are far-reaching. It has redefined our understanding of money, acted as a hedge against inflation, impacted institutional investment, and spawned an entire market of digital assets. This influence continues to grow, shaping the future of finance in ways we are still beginning to comprehend. The implications of Bitcoin's influence are far-reaching, but let's summarize what we've learned. So, what have we learned about Bitcoin and its influence on the financial market? Well, we've delved into the revolutionary concept of Bitcoin, a digital currency that operates independently of a central bank. We've seen how it was born from the mind of an anonymous creator, or creators, known as Satoshi Nakamoto. It's a fascinating story of how the idea of a decentralized currency, free from government intervention, took shape and changed the financial landscape forever. We've also explored the mechanics of Bitcoin, how it operates on a technology called blockchain, a public ledger containing all transaction data from anyone who uses Bitcoin. Transactions are added to blocks, or the links of code that make up the chain, and each transaction must be recorded on a block. But the process isn't as simple as it sounds. It involves a network of computers, called miners, who solve complex mathematical problems. But perhaps the most intriguing part is Bitcoin's influence on the financial market. It has indeed created a ripple effect. Traditional financial institutions have been forced to take notice as more and more people invest in Bitcoin. Companies like BlackRock, the world's largest asset manager, are getting involved in the crypto market, highlighting the growing institutional acceptance of Bitcoin. But it's not just about the big institutions. Bitcoin has democratized the financial world, giving ordinary people the chance to invest and potentially reap the rewards. It's a financial revolution that's still ongoing. And as we've seen, Bitcoin's price line isn't a steady upward climb. It's a roller coaster ride of highs and lows, fueled by various factors from technological developments to regulatory news to market sentiment. It's a volatile market, but one that offers tremendous opportunities. In conclusion, Bitcoin is a game changer. It's not just a new type of currency, it's a new way of thinking about and handling money. It's a symbol of a financial revolution that's redefining our understanding of what money is and how it works. Bitcoin's story is far from finished, and its influence on the financial market is a narrative still being written.